Hi, it's Amy from Columbs&Co Realty. Today I've got Jared from Embark Accounting here to talk about changes to the property legislation. Jared, the first thing really is, what is the Brightline?
The Brightline is a potential tax on a property. So it doesn't include your own occupier, that's always separate. What we're talking about is either additional properties being holiday homes or residential rentals. So when we work out the Brightline on a property, we're looking at the sale price and the purchase price. So fundamentally, if we sell a property for $700,000 and we've purchased $500,000, there's a $200,000 potential profit there. There are a number of other expenses we can bring in to decrease that profit, but that is fundamentally how it's worked out.
So Jared, from 1 July, I understand there's going to be some changes to the Brightline rules. How will they work?
At the moment, there is 2 sets of rules, either 10 years or 5 years. From 1 July, everyone gets reset back to 2 years.
And so what are the implications of that time period changing then?
The implications for property owners is basically their time frame is decreasing from 10 or 5 years down to 2, so they can transact the property quicker, depending on when they purchased it.
Jared, can you give me a specific set of dates as an example so that people can understand how that would apply to them in real life?
So if I settled a property in April 2022, then I would have to wait either 5 or 10 years depending on that type of property before I could sell it outside of Brightline. With the rule changes in July, if I have a contract date that's after 1 July, I can settle whenever after that time period and be outside of the Brightline rules.
So what you're saying is the day that the property is settled and title is changed is the date that triggers when the property was purchased, and then the contract date when you're on selling the property is the date that is triggering when the Brightline, whether it applies or not.
That is exactly correct, Amy.
So I understand the other major change is around interest deductibility and how that relates to residential property. Can you talk about that?
So at the moment, we've been stepping down from 100% deductibility of interest. So what that means is you can offset that against your residential income or profits. So we've been stepping down 25% every year. And at the moment for the 2024 tax year, we're at 50% deductibility. That is increasing to 80% in the current year, 2025, back to 100% in 2026.
Thank you, Jared, for that quick summary around the changes to property legislation. If anyone has any questions about the things that we've talked about today, then we would encourage you to reach out to someone like Jared at Embark Accounting. And if you've got any questions about the market, then please don't hesitate to contact us here at Columbs&Co.